The show must go on. It is Friday on the Independent Investor Channel live stream. So good to be with you guys. So happy to see you. So happy to see 2022 3 weeks away from being over. Who else is ready for it to be over with? I don't know. They're already talking about 2023 being a complete loss. I want you guys to really understand what I've been talking about over the last 6 years. And thank goodness that you guys get an even voice through YouTube about, when the market is high, everything's great and everybody's excited. At times like this in 2022, it's funny, people seemingly find other things to do with their time. They don't want to talk about financial markets. They don't want any part of it. When things are bad, that's when they want to pay the least attention. And I think people need to find a lot more of a neutral application because life is not short. Life is long. You guys really need to understand that you're not investing for next year. Okay. It's a foregone conclusion that we're going to enter into a recession in 2023. The opinions are rampant. It's determined that the rate hikes have gone up way too fast to curb inflation to the point where it is a foregone certainty that we have to enter into a recession in 2023. This is the consensus that I get. This is the pulse that I get. This is the propaganda that is being sold to the masses to understand that it's time. 2010 to 2020 is over. And this 2020 to 2030 is really starting off to be a rough ride. I was just talking to my friend Kyle's in the back here. He's going to be joining us for the live stream tonight a little bit, giving us some insights. I think the big thing that's being missed right now, and it's mentioned every now and then, and that is the state of real estate right now. It's something that I've mentioned. I think, in my own personal view, with the portfolio and the investments being in a plane for the last couple of years, I haven't really done a lot, guys, except for buying. I was just telling Kyle I added about 75 shares of SCHD just today to the portfolio, which was to about a $5,500 bill or something, right? It's what I buy anymore, that and gas for my truck. But I've really hunkered down on understanding that am I more eligible now with the retraction in the market over the last 20 months? And I've been tracking this since January of 2021. Okay. All of 21, I was talking about this, and Naria was an opinion out there about the market tracking off on the charts. Okay. Now it's been much more fortified in 2022 with the Fed making its aggressive move against the aftershock of the 2020 global pandemic and the effects of stimulus and the effects of inflation, et cetera. They had to do it. Okay. We knew that it was inevitable, that they were going to have to move against the impacts of providing such relief to the masses out there. But I think entering into 2022, I'm of the opinion that perhaps maybe we're more on the back end of coming out of what has been a fairly dark couple of years here to start this new decade off. Okay. Um, we had to re-rate the real estate industry. I don't think we're going to have such a digression in real estate prices per se, because people's understanding of what it means to have a domicile, it's not just sticks and bricks anymore. It's a domicile to potentially take safe haven against what has proven to be a fairly systemic shock to the market. And I think anybody that was coming out of the last decade, there's not a soul on earth that would have forecasted what we were in store for in 2019 and going into 2020. People are still groveling from the effects of the global pandemic. And it has put systemic shocks to the markets in all facets, global markets, here domestically, real estate. I think people's psyche has changed. I think their spending habits have changed. I think their priorities have changed. I really do. There's nobody on this earth that has been immune from the effects of the global pandemic. And here we sit, closing out 2022, and hopefully people make their way into the channel and and seek out an independent opinion, that of which I have. I'm here domiciled in New York, and it doesn't appear to me when I'm out on Fifth Avenue, people are struggling. Now, this is a utopia here, so fairly bad example, but I often challenge this idea of an inevitable recession, okay? Because the yield curve inverts and short-term rates are actually larger than long-term rates, that's 100% certainty. Now, there's been 11 out of 12 occurrences where this has happened, so it's a fairly interesting indicator, and it has historically proved to be a very accurate one. But I want to caution you, my friends, we are not in normal times right now. We are not. People are nervous. I think people are curbing their spending habits. I know Amazon came out and said that they had the best Black Friday around the Thanksgiving time. I don't know how real that was because it certainly didn't catch any momentum with the stock. You've got a lot of what I would consider to be some discretionary names. A Tesla's off over 50% year to date. A lot of these companies that really don't deserve to be off. Microsoft really comes to my mind. Google's had a tough go of it. And there hasn't been a whole lot of stocks out there that have been immune to the downturn. There's been a few bright spots in the market, and I come back to healthcare and utilities that have really stood up. And I know this because I monitor those bright spots in the sectors in the portfolio. But outside of that, crypto has really taken a nosedive, and I think we really need to take a pause here going into 2022 and recalibrate. The last thing you want to do is panic yourself off of financial markets. That's the last thing you want to do, because I will leave you with this. We will take a short break, but I will leave you with this. We are not investing to enter into financial security into 2023. At least I'm not. I'm 45. I'm investing for the future. And I'm investing for that opportunity to look at the decisions that I've made and make decisions based on those good decisions that I've made to put capital away, to invest during volatile times, which I have. And I'm not looking for that payoff next year. Look, if the pundits are right and we do enter a recession, no problem. I'll keep the status quo and I'll keep buying financial markets. Every buy that I make right now, while these markets are recessed, the harder it is to buy markets like this, the more opportunity you will have to reap those rewards at some inevitable time down the line. Guys, I'll be back with you in just a moment. Kyle's in the house, man. Love to welcome him to the channel. Get his quick insights and intro to the group here. He's been a friend of the channel for many, many moons here. Kyle, what's up, man?
Man, there's a lot going on. I love the SCHD though, man. The VYM, the SCHD, these dividend ETFs be crushing this year. But I was actually just talking about the valuations on them because I mean the S&P, when you're talking about things like Google, like I'm still at least in the beginning of next year a little hesitant because I do like Tesla, I do like Google, but it's been paying off for me to sit on my hands for a little longer here. I mean, Google, when you look at these advertising budget, I mean, you're in advertising, you're like, me, I've seen all these companies start taking massive cuts, 50% revenue drops in publicly traded advertising companies. I mean, I don't know how bad this recessionary period is going to get, but I don't think we're out of it just yet. So we'll see if what Christmas brought you, the Christmas holiday. What's your thoughts on that, man? The spending, how did you see consumers in New York?
It's crazy. Like I said, it's hard for me to compare New York, which is a utopia, to the rest of the country, but I think it's unfair to actually take a gauge of the U.S. populace. With 300 million people here, we're pretty lucky. We're relatively lucky across the board. And so our standard of living is hard to suggest that a recession to me, I go back to the 30s and it's like people are standing in a bread line with, waiting for brown water to survive. I don't think we're there, man. I just think that there's so much information that we're inundated with all the time. I think it messes with people's psyche. I just want to make sure that I'm cautioning people not to allow those injects to affect you and make you succumb to emotional decisions. That's what I wish for. I don't know.
I think this market though is just like we were talking about before the stream too, with some of these fixed investments, because like there's just conversations that a lot of people are having, but you can make so much on cash with zero risk. It's just go back several years ago, I started investing, always listening to like John Bogle or Jack Bogle, all these guys saying that, you need a mixed portfolio of bonds, ETFs, all this stuff. And I'm like, who's buying bonds? I'm like, they don't pay anything. Why would I want to own a bond at 1%? And now all of a sudden there's fixed investments. Like I was just talking about the high interest savings account stocks. There's actually ETFs. They just take your money and put them in high interest savings accounts and you get 4.7% here in Canada, paid monthly with like zero volatility risk. Cash in an account. Like it's just fascinating. I'm like, man, people aren't really having these conversations. But if you're not, like, I love that you're mentioning things like SCHD though, because I mean, like, they've been the true haven. That was my big bet at the beginning of this year because it was a pretty big pivot for me to sell, my individual stocks and kind of just go into ETFs. But I think we got, admitted we all got a little greedy through 2020, 2021. But at least, the pivoting for me was rough. For me, Kevin, it was like the guy just did it after diamond handing and convincing everyone to hold these shit stocks. Meanwhile, I'm holding like things like Google and Facebook and all these companies, and they're starting to get hit. And I'm like, I can't do it. I think it's better to be in the ETF just to see how this rolls out. And it saved me quite a little bit selling out of Facebook at 220 or 230 after it dropped. And now it went all the way down to like $100, right? Though I still like my family still holds some exposure and they're happier holding long-term than I am.
I do. Yep. I still hold long-term. I made a ton of money with Facebook on the way up, and I'm not going to sell it down here. Still a fabulous company, and in 10 years, it's going to be fine. The question is whether or not you try to pick a bottom here. Obviously, more attractive here. I think the upside potential is far more attractive than the downside risk.
See, I think the problem with the risk though, right, is the fundamental business is amazing, but like, that's what I kind of keep reminding myself with Teslas. You kind of get caught in the fantasy because I was literally just playing VR. But the problem is like, unprofitable businesses, you kind of got to keep reminding yourself that, Tesla's a great company if self-driving existed, if these robotics were making money. But right now it's purely a fantasy. Sometimes it's better to wait and overpay for it when it works rather than, take the risk of getting in a little bit earlier. But that's only because I'm in this risk off mindset. I'm sure when things pivot out, I'll be more risk on. But for this environment, man, like you, I love holding these dividend ETFs, bonds, fixed investments, some individual stocks with the REITs and utilities and just boring stuff. But it works. I haven't blown up my account this year. So
yeah, no, exactly. Haven't changed a thing with my passives. Matter of fact, one account that I hold that I've just dollar cost averaged and I don't pay much attention to it, I'm actually up year over year by just continuing to fund those markets. And that's just an index fund portfolio. That's kind of like my 401k type of thing. It's the TSP through the government. So it's like a 401k, but well, just the old onus, I paid the least attention to that. And it's doing really well. But yeah, I'm of the mindset to understand that every aspect of risk in your different disciplines in your portfolio at certain times are going to be subject to risk. Always. And it's really difficult to bounce, back and forth from one to the other. I'm about as heavy dabbling in the microcap space as I've ever been.
Now's the time.
Well, traditional schools of thought would suggest that I'm crazy, but
Oh, yeah.
It led us into this downturn. And see, that's the thing is my dollar cost average doesn't change. Like people need to understand that on a fairly nominal salary, me and my wife, I mean, we make a fairly nominal salary. We work very hard for our money, but every month that goes by, we're north of a couple $1,000s that go into our savings in a lot of different capacities. That's pretty impressive.
Yeah.
Should be motivating for people out there because we do make sacrifices. We don't live crazy frugal, but we do make sacrifices to do those things. However, I have justified looking at some of the value propositions in some of the most recent companies that we're looking at, and they are fascinating.
Yeah.
They are fascinating. And if they don't ever turn out to anything, well, no problem. I'm totally willing to accept that. But let's put that aside for a second. There's some real value being created right now. Now, the entire microcap space will and always does traditionally lead into a recession and then also lead us out.
Yeah.
So where they get discredited right on the onset, and nobody ever wants to touch that stuff because future cash flows are not being valued in the way that they would during a bull market. You get no credit for no cash flow, and you get very little, if any, credit for future cash flow expectation. So that's the microcap space in a nutshell. So if you've got a really good story, that's just not enough right now,
Yeah.
and you'll get punished. But I'm doing a lot of due diligence. I discard about 98% of the companies that I look at. But for the few that kind of strike my attention, I will engage in that due diligence. And dare I say, in a few instances, take a small position, relatively small, but it's the most attractive area. Yeah, I can sock it away in utilities too, Kyle. And I do, and healthcare and the dividend payers. And SCHD is a new holding of mine just here in 2022 to kind of buffer the volatility. I own it in a couple of spots in some fairly big positions, but
It's awesome.
for
Yeah.
for some reason the microcap is attractive to me, and I don't have that validation. I don't know. Somebody might say I'm crazy, but time will tell.
I
Time
think
will
what
tell.
you're shining a light on is your risk tolerance, right? Because I think even though I'm younger than you, I think we come from
Yeah,
a different work perspective. Because I think people have to understand you have a very stable
very
job.
well said.
Yeah, and
Very well said.
you can. For me, I'm always horrified because my income is
Yeah,
so volatile because it's
yeah.
based off the job that I'm in. Which 2 years ago I wasn't doing what I'm doing now. 2 years
I
ago
know.
I did a job for 15 years, and then I flipped, and now this job is in question because it's so volatile, and it's just like so I'm always on edge of like, I need to make sure that, I always want that income, but I also want it to be as stable as possible. I'm not chasing 7-8% yields. I'm very happy with a 3% yield across the whole portfolio,
And
holding
the
the
safety.
S&P, holding VYM, holding bonds. Like that yield is going to make me over 1,000 a month come into the end of this year. And, I know I could spend that money and I wouldn't sacrifice the growth of the portfolio. I think that's where a lot of investors get mixed, is they just want these huge yields, but I can hardly find a huge yield that doesn't underperform the market. I
Yeah.
still believe in total returns, and I'd love to just be
Yep.
diving more into small cap. But if I lose my job, I don't want to be forced to be like, okay, well, what am I going to get rid of out of the portfolio? The stuff that's growing, or
Yeah.
the stuff that or the stuff that's paying the dividends, right? It's just like, it's just kind of, I don't want to have to sell stuff, and if I do, I don't want to be in a position where I'm selling growth stocks or something that I want to hold for 10 or 20 years.
Yeah, the VYM, the SCHD, the good dividend payers, you don't buy those with the expectation that you'll ever need to sell those ever.
Exactly.
But you make such a good point. I would just want to put this into context for people out there. They may think I'm an asshole for mentioning this, but my pension alone is worth $1 million portfolio
Yeah.
until I die. So you come back and it's like, hopefully that got your attention, because people need to hear what, and I'm so proud of you, man, for saying that. And I'm proud of you for doing what you're doing. You're making really good income right now, but you're young and you need to. Like, it's critical. Like, you've got to do it. And you will continue to do that. But to understand that, like, position that you're in, you specifically, is so important for people to understand that, you know, you've got to set up those what ifs, those contingencies, those exit plans. And you're not exiting from microcap. Microcap is really, really tricky. Microcap is one of those things to where you're never going to enter at the right time. Never. You
Exactly.
may have to sit on a digression for multiple years. And that's a game that a lot of people are not willing to play. And nor that should they even be willing to play that. They might think they are, but they should avoid it at all cost. It's not right for the vast majority of people out there.
I think it's too, because you get too emotionally connected and it's hard to not deal with the volatility. And actually, I'm surprised because my fiance is holding stocks that, I don't hold, like MindMed. She still holds some of these. She doesn't care. She's like, I'll hold them for 20 years. But I think a lot of people, if they're smart right now and they have the ability to not be caught up in this interest raising environment, they have cash, a stable job. I would
Yeah.
severely, maybe not in New York, but like I'm starting to see the cracks in where I live, and people are feeling the pain of variable rate mortgages. And like my bosses, people I know, they're paying over 125, 150 a month. They're up to almost $1,200 extra in payments. And a lot of people are getting squeezed, man. And you're going to be able to walk into those homes. If you're ever looking for a house, I'm not much into real estate. Not that I'm going to do this, but you can see the value in it. And it's not often real estate gives you those opportunities. Nothing saying the market's going to correct a lot, but there will be people that'll be willing to take a lot less in a market, especially here in Toronto, where 50% of the selling volume's dried up. Like 50% of the buyers are gone. It's just nuts. I mean, there's just so much volume dry up that if someone's desperate and they have to get out, they're going to take a better deal than the market's offering. So it's just like, if you got cash and you can afford these interest rates, or you have family that could privately loan you money at a maybe 3 or 4% instead of a 6 or 7. I mean,
Yeah.
I think that's where the real opportunity is, because inevitably the real estate, like you said, I believe is going to come back. I don't think it's just going to, again, markets are different. I mean, Canada, where I live specifically, we're seeing 20, 30% corrections. But again, I still think because we have supply and demand problems, nothing has really changed. It's just that buyers don't want to take the risk, in this interest raising environment. They're going to sit on their hands and see what happens. So, I mean, I think this is where the opportunities open up. Same with stocks, like you're saying with small caps too, though, right? Like this is where if you have the cojones and you weren't stupid and you margined yourself or took on debt, I mean, this is where you get to make those opportunities. This is where you make real money, right? You're buying things at crazy discounts compared to they were a year ago. So,
Uh, Um, I don't know. I'll let you know in a couple of years. You know how transparent I am. I don't care. I'll come in and say I lost it, or I'll come in and say I'm a millionaire, and I'll
yeah.
be the same person. I don't get all fired up about stuff. And if it's a rendering from my investment, I'll say that too. Things have been really, really good with the business right now, and that's a whole side conversation to have that I never ever would have thought would have been a wonderful supplement to volatile times in the stock market. Hell, everything else in my life is just kicking some ass. The only thing that I need is a stock market that's going to cooperate, and I'm at my seven
Oh,
figures.
100%. Yeah, 100%. We've been very blessed because a lot of people complain about, like, because that's the thing with jobs. It's like if you secularly focus on like tech, all you're going to hear is job loss, job loss, job loss. But you go to
Yeah,
energy, job hiring. You go to restaurants, job hiring. Like there's so
yep.
many sectors that are just demanding and they can't get it. They're raising the wages on them. And like same with like you're saying, like our businesses, which again I'm always terrified for because I'm seeing volatility everywhere in it. But still, like you said, through 2021, for how bad of a year this was, I mean, I'm still, I'm walking away very happy, surprisingly. It's allowed me to set
You've
myself
earned
up
it.
to be very, like, not comfortable, because by God, no means I'm not a millionaire. If I'm lucky here with a good paycheck, I'll hit 400,000 CAD, not living in them USDs yet. But
Let's hope
still,
it.
I'm for 30 years old. Like I'm, and between that and my fiance, which we won't talk about her stuff. I mean,
Yeah,
we're very like well off enough to survive any recession. Like we're very blessed to have parents, families
I
that have
t-
helped us do this and all this stuff. So I mean, I can't complain by any metric.
here's what's always intrigued me about you, man. I'll give you the best compliment that I could ever give you. You're one of those guys that is the quintessential think and grow rich. Like you've mentally got it wired in. And that's what people need to understand about you and me and a lot of other people out there. We care about this stuff. We really do. The hustle is great, but there was a time where the hustle did not render any income. Okay,
100%.
we were doing it for the love of the hustle, and I still do it for the love of the game. Like I talked about, once the dollar amount goes to seven figures, do you think that's all for me? I do that for the three people I support in my household. I don't give a shit. You guys wonder why I come on and I wear the same T-shirt every week. I'm like, come on, Ryan, man, pull one suit out of your closet. I mean, you got to go buy yourself a T-shirt at the outlet store. But you guys need to understand that as a businessman through and through to the heart, it is about the business. And I am
I
that
love that.
is the sacred piece that I look to maintain when I do business with people, my business interactions with people, down to the granular email that I send people. It's always on the up, and it's looking to maintain the integrity of that business transaction. That's
It's
it.
it's cool to be humble today. I think a lot of people recognize that, right? Like we're not in the 1980s or 90s with all these big rappers buying these huge, like we're well past that kind of influence, I think. And it's funny because I was just giggling a little bit because you just reminded me of my fiance. She's like, you look like a douche because, I don't wear branded stuff, but literally everything I'm wearing right now, I've got these Jordans. I didn't pay for it. I either got a gift of doing work or
I
some
know.
type of Balenciaga winter jacket. And I didn't even buy it. I didn't buy this watch. I didn't buy this ring. I didn't buy this. Like, you look like a douche. I'm like, I didn't do it though. I didn't go out and spend,
love it.
Hundreds of dollars on this stuff. I worked hard, and over years, you just people gift it or accumulate. And it's
That's
just
cool.
funny the way you say you keep wearing the same shirt. And I think that's very appreciative because that's the hustle I don't think people appreciate enough. I always like saying that, if you have time, like, and you're going for walks, find something you love doing because you can always monetize it, right? Like if you love walking, you're in a suburban area, walk by Starbucks, turn on this, Uber Eats, pick something up for somebody, drop it off their house, make an extra 10, 15 bucks. Like there's so many little things people can do to take advantage of that mindset. You're saying like the think and grow rich, and then, just started having that investment opportunity because that's the real thing, right? Like there's no value if you can't create it and then obviously, deploy it and learn how to deploy it correctly. And I think you've done a fabulous job. I mean, and again, having that family, I think really motivates you as well, right? It's kind of the similar thing with me because I've had to help my family through some stuff this year. And I was so blessed that I had emergency fund, cash, $5,000 here, you need it, it's good. Like that feeling, I don't think people really appreciate until they get slapped upside the head and they have nothing to fix their problem.
That's the key, right? So I can work as hard as I possibly can and not have enough to help somebody. What I can't live with is not working hard enough and not having the money to come back and help when I'm needed. See what I'm saying? I've got, that's why I do this project the way that I do with the ferocity that I do it, because hopefully people sense that there is a sense of urgency with me. And I believe there's a sense of urgency with everybody else. You talk about 30. So you're running ahead of the game. You're running ahead of the game. And I've known so many people that are complacent, and they're complacent to a point where they get to their mid 30s, 40s, and they're like, man alive, I need to get going. I need to start going. And the time to start is when you have that realization that you only have so much time to figure it out. Man, life is a beautiful thing, and I don't know what motivates people. I mean, like I've shared with the group here, I used this last couple of years of volatility as a time to really kill it, and I've taken on some habits that have been incredible for me. I'm in the gym at 5 o'clock every morning. Every morning, I mean, I don't miss it. And like it, you should see, like I'm a machine at work. It makes me an applicator in my profession. With my side hustle, I think you guys would probably see a different independent investor channel if I truly did feel like I had more time to devote to the craft, because the majority of my day, see, I have not transitioned to entrepreneur. I have not made that transition. This is still a side hustle. And I think it's demeaning to say that at this point, because it's more than that.
But you're very, very blessed, man. That stability, I think, as I age, is something that I appreciate a lot more. Even though like I've done very well for myself, but there's just when you don't have that stability or some job that's very reliable, like the sketchiness that's always in the back of your mind gives you that anxious feeling. But I also want to offer an anecdote because there's one complaint I get a lot, man, is like people are like, oh, you guys don't live. You don't live, like all that stuff. You got to spend money, have fun. And I'm like, what? Like if people could have seen how I've lived my life up to this point, like I think people need to understand, like if you love doing something or you love like, and it's fun, you can get paid to do it. You can get paid to do anything you want. Travel, you can become, travel agent like my uncles did. They go on cruises all the time. You can become flight stewardess, pilots. I mean, I worked with a production company, entertainment industry full time. I got paid to go to places people had to pay to go to. Like, I just don't think people understand, like you can do both. You can have an incredibly fun life and get paid, not go broke and wake up in your 40s, like you said, where like that scares the shit out of me. Like, I don't want to get up in my 40s and be like, shit, I'm just figuring this out now. Like, that's what scares the shit out of me. like by then I'm hoping I have it well figured out, and more into semi-retirement by then, like some of the YouTubers like Hidden Freedom and some of your friends. I'm like, that's where I want to be at 40, not being like, oh damn, now's the time to start, right? Like, so I mean,
I'll probably hang it up from my career at 59. If something crazy happens to where I'm sitting on a couple mil, which is absolutely in the cards, then I could hang it up sooner than that. But
you won't quit. You'll be like me, man.
Not YouTube. I won't ever quit YouTube.
You'll
Social media, I will not quit. Here's the thing, man. I do this project. People need to understand that if I didn't do this project, I would go effing nuts. I have to have a voice. Right? I have to have a voice, man. As unique as it is, it's only mine, and it would drive me up the wall if I couldn't share it with people. It would go crazy. You want to take this question, Ken?
Oh, the Tesla Semi or Hyliion?
Any Kathy Wood fans?
Oh, sorry, I'm reading the top comments. I was just noticing that because that Hyliion video you made was really entertaining. Any Kathy Wood fans here? Kathy Wood's a hard one to wrap my head around here, just because because I'm not a value investor and I'm not a growth investor. I don't advocate one or the other because I think the markets are pure fugazi. I mean, if valuation mattered, Facebook wouldn't be where it's at. Like, there's just no doubt about it. Same with Alibaba, and you wouldn't see Tesla or Amazon trading in these PEs from 50 to 80. I mean, it's just, I kind of found myself being more or less a trend investor, trying to find companies that have trendable futures and hold on to them for 3 to 5 years. Because I don't think I've ever really made huge money on looking at cash flow or valuations. It was purely just the luck of the draw, knowing. Because I mean, I got in early with that idea, right? Like I think 2016 or whenever I started, or 2014 when I started investing, the first stock I ever bought was Canopy Growth Corp. And the only thing in my head was, they're legalizing it in Canada in 2018. I'm just going to buy the largest current company and just see what happens. And sure enough, the wave came. Caught it with Tesla, MindMed. I found myself finding a lot of similar positions, but I think it's fun listening to us banter because we both come from very different mindsets. I got to ask you though, man, what are you going to pick here? Tesla's Semi or the Hyliion? That video you posted was fabulous because it was very kind of double entendre. There's a lot of levels to that. If you actually listened, I thought it was very intriguing. I like that Tesla Semi. I was kind of impressed by, but like I said, it
is impressive.
I love Tesla. The valuation just needs to come down, or they need, because I mean, man, the future of robotics and AI, I think, is just going to be beyond. I think it's gonna easily outweigh the value of the iPhone. I don't think people understand the way. Have you used OpenAI? Have you ever? So anybody that's bored, go to a website. It's called beta.openai.com and sign up to it and just mess around in the playground. Your mind will be blown. This thing writes code. It's like Google on crack. It writes, man, okay. This is my little hidden gem here for anybody that's like into blogging or website stuff. I use this thing to write my blogs right now. I'm literally using an AI to write my blogs about stocks because it does most of the framework. I can't explain this thing, man. You tell it to write like a trading bot that's based off like moving averages. It'll write you all the code. You just watch some videos on it. I don't think people understand the severity of AI. And my buddy made a good point. He's like, think of a band. Like if you like AC/DC, imagine this AI is going to learn their entire genre, their voices, and it's going to be able to make music based off them, but newer music. Same with top 40. The AI will just learn what people like, and it'll make its own. And people think that's so far-fetched, but just go use this OpenAI site. It's a very simple format that really is so intuitive. It seems like, how is a robot doing this? It's literally Google, but it makes it for you, answers the questions for you, does the work for you. If kids are in school right now and they don't know this, their homework would be completed by a bot. It's happening right now, and it's visceral, man. It's exciting.
I think to your point, I think we're probably first batter, maybe second batter in the first inning of a multi-decade game here. So what Tesla and Hyzon and Nikola and Hyliion are working right now, they haven't even put their big toe in a very, very, very big lake. And I think people understand that the idea of removing diesel from the equation is absurd. I'm one of them, okay? But to not entertain the prospects of alternative fuels, see, I see this with my profession more on the ocean than I do over the road, okay? And those mandates have been capped at 2050 in accordance with the international standards. Okay. And there have been initiatives put into place to actually move ourselves off of heavier fuel and more looking at the alternative solutions. The question is, what are those solutions? Do we run hydrogen directly? Do we run ammonia directly? Do we run methanol directly? Do we run a BEV type of application? And my opinion is that I think we have a very, very blue ocean ahead of us and a very agnostic future, that of which is not going to be free of diesel. However, to provide ourselves a little bit of optionality in the space will probably be very, very attractive, where fleets can look and say, I can put a Tesla on a route here with 350 on that route and get it to the end to draw that charge to incur zero downtime, right? Even though it takes 30 minutes to charge, and then bring that unit back the next day or push it on to the next hub. See, it gives us optionality instead of being subjected to the diesel market, which we all know the controlling entities globally that affect the diesel market. And that's not going to change either. Okay.
Those trucks will be around forever, right? And like you said, long haul is still a bit questionable. These Tesla trucks are still in question, right? Because it seems like they're just kind of going through a buildup phase where they're just testing them.
I think Pepsi's testing them. I think they bought that. See, what are you going to do? You're going to buy a media spot and just pay the money to advertise Pepsi and show somebody drinking it? Or are you going to show that you're flying the flag of green by going with the flagship name, Tesla, right? And maybe they get some research and development back out of that project that's really worth it, so they can make some educated decisions about what they do going forward. I don't think they've chosen a bull by any means. But Pepsi's big enough
very
to do
different
that.
companies too, right? Like honestly, at this point, I think in the midterm, you'll make more money off Hyliion if you have that kind of speculative risk kind of mindset in your portfolio. Just because, like you're saying, they're kind of attacking one specific detail, and they're gonna like scale it. I think Tesla's going to become more of an ETF because their just ability to optimize every aspect of their business is just a marvel. I mean, they're building train tracks now. They're going to be training their cars across the entire country. Like the way
that's what's going to be fun in 20 years is to see the Tesla of today and how it evolves over the next couple of decades. That's the intriguing piece.
But they got a long way to go, man. Like I love the
idea. They do, but now's the time you want to be having those conversations.
Yeah,
exactly. I mean, the stock's off over 50%. With Hyliion, the story has changed so much since coming to public markets, and I fear that the bottleneck that is going to exist at the end of 2023 is going to be real. And you can only hope for a log jam to break up a little bit, because they've put themselves in a bit of a corner. And let me explain. The idea of them just segueing into the original equipment manufacturer, in this case will be Peterbilt. They're helping them make the initial, providing the chassis, etc. But the story has changed so much in that Peterbilt is not just going to take Hyliion in and say, yeah, sure, we'll cut out 2,500 units a year for you, no problem. It doesn't work that way. And that was a piece of data that I didn't have on the initial onset in 2020 when I did my due diligence. As a matter of fact, I would suggest that all the pieces of due diligence that I did on the onset in 2020 have now transitioned to a place where a few catalysts need to happen. There's pressure on the OEMs, there's pressure on the fleets, there's government mandates and state mandates, there's credits, there's tax incentive, etc. So you have all of these things out there floating around. None of them have come together to actually mean that a true product is going to march off of the OEM line and be delivered at a constant pace, and dare I suggest at a margin that's attractive. Because right now, Hyliion is backed so far into the corner that these first few units that they turn out are going to be losses. They will not make a dime on the first few, because the cost to incur to get those units to final and deliver those to the customer, they're not going to get that margin enjoyment from those bulk orders that they could get if they were buying those products that are hard to get now during the supply chain issue. They're not doing that. They're having to piece these things together. So there's a lot of headwind. And when you talk about risk or appetite for risk, Yeah, it's there. I can build a bear case just as easy as anybody. And the bulls hate me for it. They hate me for it. But I've done that as a savvy investor to
I think you
understand how
have
I
to.
coin my bull. I know you have to. I won't I won't
Yeah.
budge on this.
It's a very
I
bipolar industry. You really have to, because I think people think like I've been real negative on the companies I used to own, but I'm only negative on them because it's like a parent. It's like I want you to work, but I see your flaws.
well, you stated right. You stated that Facebook's core business is still strong. I can only
That's right.
presume that you're referring to legacy Facebook, but the amount of R&D that has got into the Meta and the massive shift has provided this shock to would-be shareholders to understand or not to understand if the money that's been dumped into this new initiative is going to render the success of the past as we march forward. So
Sure.
we're in this little bit of phase. So when you say legacy Facebook, I'm kind of in that camp to say, God, you were kicking ass. You reinvented advertising, you had it, and they still have that, but a lot of those dollars are going into the new initiative, and that's how Zuckerberg thinks. He's just, and
I
I,
hope
I
they get
don't.
a foothold on it. I mean, I think
Me
they're
too.
about 5 years out. I think because like Zuckerberg said, like they're trying to merge the two together, right? Like getting glasses to be as thin as possible and offer the augmentation. So they're literally doing it from both angles to start narrowing it into each other. But the problem is like the experience like is there. It's going to be the future to some extent. It's just a matter of is Facebook with their Reality Labs just becoming the next MySpace where Apple and everyone, all the big guys that have the money to compete are just messing around, seeing how they're doing it and are going to come out with something that's, like the iPhone that just destroys BlackBerry and these other companies. It's like,
Yeah.
that's the speculative aspect of it, right? But I honestly, and again, if any Facebook fans out there, I use the Oculus, shit you not, ask my fiance at least 5 days a week, at least 5 days a week for an hour and a half or 2 hours. Like I'm on
Right
that.
on.
It hooked
It's
me.
fun.
I love it. It gives me exercise. It's social. It
Man
is.
alive. I haven't got enough testimonial on the unit. I don't know. I've never tried it. I
People
don't
shit talk
know.
it all the time,
Yeah.
but
I'll be damned.
I've been obsessed with it since I got it like a year and a half ago or whatever. And I haven't stopped using it. So, I mean, if there's any testament, I don't like the idea of them moving to the business front of it right away. Cause I think gaming and, human interaction and what they're trying to achieve is mostly in gaming. And that's where it's going to come from initially. And a lot of us were pissed that the new VR, I mean, I would have bought it if it was at like $1,000, but
Yeah.
it's not meant for gaming. The battery is crap. It's just like, why would you go
Yeah.
so immediately in that direction when you know what probably most of the end users are primarily using it for today? Because we're not using it for business, right? I mean,
All
it's
right.
probably, the part of the web we'll leave on the down low here,
All right.
the
I gotta.
virtual reality side of that or games. Let's
All
be
right.
real.
I gotta do a Q&A for the CA. Rob, do you think Nikola would partner with Tesla? No. The answer is no. Okay. I just gave you a quick elevator 30 seconds on the bear bottleneck theory with Hyliion, and Hyliion has a badass product. Okay. Nikola, I'm not so interested in their product because their capex is so high. Okay. Part of my bullish thesis around Hyliion is their lean business model. But that business model, when I say lean, when you're burning 135 million a year, and that's your capex, and you don't have a clear path to profitability, that's the risk. Nikola doesn't have that clear path to profitability, and their capex is significantly higher than Hyliion because they are an OEM. I wouldn't see any strategic benefit at all for Tesla making that move. The answer is no. So,
Yeah, it'll be neat to watch. I love that you're covering the story and you've been with it so long as so many
oh
people
yeah,
have kind of flopped out. It's kind of neat to see how
continue.
consistent you've been. I don't know about Nicola. I mean, we're watching, like I said, I'm not caught up on these enough to make any, the definitive opinions on these things.
It comes down to hydrogen, right? So Nikola has really put a lot of faith in the BEV segment with a lack of infrastructure and the hydrogen technology. Okay, hydrogen in theory you would think is just a phenomenal energy source. Okay,
But apparently it's,
hydrogen is not a phenomenal energy source. It's hard to transport. It's
yeah.
hard to take. It's hard to keep uh, uh, happy. It is dangerous. It's flammable, right? It's just a difficult commodity. What we've known historically is that methanol, LNG, renewables, fossil fuel, diesel, all the way up. Crude, we use it for everything. We use it for everything. Our plastics, it's fantastic. So this idea of taking, the hydrogen out of that molecule, breaking it, and then using it as fuel is scientifically not a good idea. And I don't understand why there's so many people that jump on this bandwagon. I don't get it. I think it could be, but to actually split the molecule, right? If it's not being done in a green sense, then you're actually being more pollutive by going through that. If you're willing to go through the green hydrogen process and produce the hydrogen in that manner, yes, it could be one of many viable solutions. But the problem with Nikola is that they are a two-trick pony, and I think both of them have very, very flawed business models. And the BEV is up against Tesla. They're in the exact same headwind when they're looking to penetrate a market without ample infrastructure. And they are up against a utility grid that is not just going to cut permits to these companies to take inevitable or infinite power to power these trucks in the way that they believe that it's going to be powered. It's just not going to happen. Utility companies, man, they control it.
They do. I agree. I mean, it's funny listening to these guys. If there's one thing I can give some advice on here, as much as I love Tesla, a smart person would own none of these automakers, because so far Tesla and Ford are the only two companies to not declare bankruptcy through their entire history. And GM's done it so many times. I don't, it's such a horrible low margin business. Tesla's too overvalued. It needs to, like, if you're buying it, you're speculating on its future. If you're buying GM or Ford, I mean, you're just talking about really low margin businesses that are just horribly integrated from the bottom up. I mean, I've always hated the auto industry and have avoided it like the plague. You guys should just, if you're buying
unions,
yeah,
that's the reason I don't like them. They're horrible.
You want margin. Like, there's so many companies making 30 to 50%. I work with small caps that are pulling in 60% margins off their business because they're all digital based. I mean, why buy an auto company that has to make 100 billion to pull in, a 10, 15% margin? It's abysmal. Like, I don't know. There's just not to belittle, like, I know the GM Tesla, that conversation always gets super heated, but like, I just see in my future, like, I just don't see, like, the phone industry, man. I think most of the auto industry is going to dissolve into a few companies. I imagine Tesla will be one of them, but I just can't see all these companies competing at scale. The big thing right now, though, and the problem with Tesla that actually GM has on them is, I think the Chevy Volt, they have a hybrid right now that's like, I think 25 or 30,000 or something like that. Yeah. I mean, the big problem is why am I going to buy a $40,000, $50,000 Tesla when I could buy a $10,000 used gasoline car where, that extra 30, 40 grand will fill up the gas tank for the entire lifetime of the vehicle and still leave me tens of thousands left over, right? So until these cars get to like a 20, 30K range of like value, then right now we're still just in this premium. We need to get it marketable to everybody and make it.
We need to get it marketable. It's fallen off in China.
Yeah.
I can't say that it's fallen off here in the US. I tell you what, man, I drive the roads here and every other car is a Tesla. So I think the demand is fairly heavy, but I do consider it to be a fairly luxury type of discretionary item. And the people who do pursue owning a Tesla, man, they're all about it. I do want to address one question here. Helium Self says hydrogen is the future. I think he's playing gamesmanship. I think you need to pay it a little closer attention and read between the lines.
I don't know enough about it again, but when Elon Musk says that, the guy that pretty much revolutionized the entire, you call him what you want, hate the guy, say he bought Tesla and he didn't do it himself.
Yeah.
The guy knows something about the future of electric cars, and it's not going to be hydrogen.
So the funny thing about this, right, is it kind of cannibalizes his own business model in that, okay, hydrogen down the line, when available, is going to have an iteration of the Hypertruck ERX hydrogen model, right? The irony in that is the agnostic model of the ERX can burn hydrogen, okay? So why wouldn't you just opt for a generator that can burn hydrogen, ammonia, regular diesel more efficiently? I mean, again, I keep coming back to this optionality, and people want to keep coming back to me and say, hydrogen's the way of the future. It's the only way of the future. And I'm like, you just need to stop smoking so much and figure out that fuel in and of itself is valuable. Okay. look at how crazy things get when the price just fluctuates on crude oil. Okay. There's a reason for that, is because crude oil touches everything. It
Yeah,
runs jets. Okay. It
literally.
makes our plastic. It is in everything that we do. It is that important. And to suggest somehow that we're not looking at the total landscape and understanding how we can extract the value out of the entire landscape is fairly short-sighted, in my opinion. Yeah, I've heard Healy say this, and I think he is talking tongue in cheek to give an acknowledgement to the competition. He can't fully believe that. He can't. As smart as he is, there's no way he believes that in its entirety. No way.
I'll leave
Yeah.
people with two bets here if you're speculative. Now, I'm not in that nature like I used to be, but if I was, honestly, the two best markets I think you can go after right now, if you've got a bit of a speculative bone in you, is go for lithium. Any company that has a huge value of
Sure.
lithium producing or not, that and nuclear. You can buy simple, safer bets like Southern Company or Duke Energy or some of these companies that give you exposure to these nuclear plants, or you can
I
go with
like Camco. Yeah.
but those two bets will be the easiest bets to print money over the next 10 years. I mean, the lithium commodity price, man, is still holding ridiculous highs. It's the only commodity that's just wrecked everything this year. And it's going
You
to
don't buy it as a commodity. Is there a company that you know
Oh, there's
of?
lots. Like there's
Yep.
Lithium America. The problem is there's
Okay.
nobody making it right now, and it's just these people that have bought up the land. They're building into production because there's just so much damn demand. I personally work with graphite and lithium companies, and when I listen to them talk, like their problem is getting the mines functional because they're like GM wants to talk to us. All these big auto companies, all these other companies that are just trying to use battery technology are talking to us. Universities, and I'm like, when you hear the demand for this stuff, it's no wonder the commodity price is just through the roof. Like they're going to be worth more than gold. That again, and I still think, I think wind and solar is a part of the future, but I think nuclear largely dominates those industries because it has a lower carbon footprint than solar does. Why even build solar if we know nuclear is so sustainable? And you got some issues with some storage, but that stuff is like, we're talking about incremental amounts. I mean, when you look at the scale of it, it seems like a lot, but I don't know. I just think nuclear is
Is
just
it the play for nuclear to go like with Duke or Southern that actually have reactors, or is it more the play to go with like, the uranium type of angle with a Cameco?
not for me to say, man.
What's your, you don't know?
Not,
I
like
mean,
I said, if you had a speculative bone, you wanted to research, you had some risk on, I mean, go for it because it's just the most obvious bet. I mean, of the whole
oh
market
yeah,
now, you're
yeah,
not going
yeah.
to lose if you just don't screw up one bet. Like you could easily 10x your value and just give it 5 years for one of these lithium companies to get into
Well,
production.
we
Like
talked about bonds, man. I'd rather own Duke and
that's
Southern, man. I mean,
because that's the thing, right? Like me and you, like you were in different space. Like again, if I went back 5-7 years ago, I'd be way different because I think if you have less money, it's easier to be more speculative because you have such a long runway. Your little
yep,
bits, it's not a big deal if you lose 5 or 10
there's
grand.
some merit to that.
But now I'm like, I like having this big lump very protected. And it's like a baby you're trying to coddle that you worked too hard for. So you don't want to, necessarily take on like, because me and you are probably making, I still own speculative stuff. I own venture capital companies that haven't come public yet that I don't talk about. Somehow I managed to get my way into angel investments that I think could do potentially well. I need to make more
Fantastic.
videos on them, but I don't want to piss people off. And, I feel
Yeah,
like
yeah, yeah. I
I'm trying to be
understand.
careful with it because I do like
Yeah,
Aduro as well, the company that you're working with that we're doing stuff
yeah,
for. I mean, there's
yeah.
companies that I'm owning that I like, but again, it's not my footprint because I'm only buying like 500, $1,000 here or there of it. Whereas that, if a 10X is, I made 10, 15 grand. It's not like
Yeah.
where I was dumping, 10, 20 grand in the Tesla and like these super, like, getting these crazy runs where it's going to make up like, 30% of my whole portfolio gains. Now it's like, 10 grand is barely a drop in the bucket. So for me, I'm like, it's
Yeah.
fun. It's cute. It's not like life changing here. So, I mean, but again, for somebody that doesn't have any money, 5 grand in a good speculative investment over 3 years, that 5 or 10X's for them, that becomes a whole new world for them. That's like a year's worth of income, right?
I think that's prudent for people who are just starting. And I see these dividend, like they're just cheerleaders for dividends. And it's like I feel a lot of people who have that first 1,000 or 1,500 are like, okay, I'm so scared of the market, so I'm going to go dividend strategy my entire life. And on the surface, that might seem like you're doing the right thing, right, to protect yourself to the downside risk. But I don't. I think you're going to set yourself up for multi years of underperformance. I think you are. missing the point of why you're investing. You know, investing when you're 18, 19, 20 years old, as if you're like a 50, 60,
Oh, you can,
70 year old.
yeah,
Um,
light
you
19.
gotta be careful. You gotta be careful with that, man. Like the very strategy that you deploy, depending on how loyal you are, I think dividend growth investing has its place. I think it's wonderful. But having the capital that I have, I would just take a wild shot and suggest that I've got six figures wrapped up in dividend paying companies now, but I also have the same amount or more six figures in passive investing,
Yeah.
right? Two completely separate buckets. I don't pitch the two against each other. I don't say, well, my passive's kicking ass and my dividends are lagging. I don't do that because I expect one set of performance over one and I expect a different set of rules over the other. And I don't care. I don't pit them against each other, but if you're a beginning investor, I honestly think that when you're young, there is a place to learn yourself up on the opportunities in the market because unless you want to just go play the lottery or you want to hit that pie in the sky business that you're going to start. I mean, I wish
Well,
everybody the best, man, but I'm here to tell you it's harder than you think. Okay.
yeah, but
You too.
it
Go ahead.
is. No, 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 finish your thing. I don't want to cut you off. Sorry.
No, I want to make sure because I think that YouTube is troublesome for a lot of people who come on and they're like, dang, okay, I can do this too. And you can, but it takes a lot of work on the onset.
Yeah.
You can watch a 10-minute video and think that your life is completely changed. But the sheer devotion of making that happen along that path is a lifelong devotion with no certain guarantee that you're absolutely going to make it in the
No
capacity that
guarantee,
you
but
think you can
I
make
can
it, you know?
guarantee if you don't do it, you're not going to get anywhere, right? Because that's what I
No,
always loved about
no, no.
Dave Ramsey and these kind of Grant Cardone guys. Are like, I can't guarantee you're going to be rich tomorrow, but if I told you to give me 10 or 20 years, what would you say? Probably not, right? And the other thing, I mean, there's just so many good quotes that come out of these guys because people just don't have that long-term vision or the diligence to stick with it. Because Dave Ramsey's like, look, can't promise you're going to be a millionaire, but if you shoot up and you end up with six figures, you're really going to be complaining. It's like,
Yeah.
and at 18 years old, man, it's like, I don't think people understand the value of that either, especially if you're prudent with it, like Tesla. Like, if you bought Tesla at 18, you don't have to care what it does for the next 10 years because you'll only
Hmm.
just be getting to my age, and
Hmm.
that'll have 10 years of value compounding for you where the valuations can catch up. Like, you don't even have to care about valuations in the market if you're just buying solid companies, right? Like for you and me, if you're buying Tesla at your age, like it damn near needs to be somewhere in 10 years because you don't want to be utilizing that stock when you're
Yeah.
70. And that's
Yeah.
where the value starts to play out. But when you're 18, I mean, you could give Tesla 10 years to catch up to its value. You don't even have to care about it. Like you could just put little buckets of money everywhere, forget the
We're
values, and
we're just we're dabbling in like stretching people a little bit, and I think so many people want to adhere to the safe route. But if you
which
can
isn't wise.
just entertain, doesn't mean you have to make the move, but explore the entire landscape,
Exactly.
broaden your perspective on this deal, and you'll probably be better off for it because, people
You're
are
going to
way
lose
too.
money. Everyone's going to lose money, man.
I tell you what, I mean, I
We
look
all
back and
lost money.
I was investing at 18 years old. Most of the stuff that I did from late teens, early 20s were mistakes. Now, was it a failure? Did I give up? No. I learned from every bit of it, right? And the learnings that came out of it have rendered where I am now.
Yeah.
Give or take, whatever, however you want to place judgment or value on that and say, okay, well, I should be 3x where I am. Fair enough. It is what it is. I'm very, very open with where I am and what I've been able to grow. I
That's
think
toxic mindset,
my
though, man.
what's that?
That's toxic mindset. That's a hard thing for people to get over is comparing themselves. Cause I'm like, I can only look at
Totally.
myself yesterday and where I'm going tomorrow. If you
Oh
start
man, I
comparing
tell you
yourself,
what. I
you
tell you
fall
what.
apart.
I tell
Like,
you what, man. The only one that I compare myself to is the person that I was last year, 5 years ago. you
yeah,
know, and I'm competing against the person that I want to be. 3, 5, 10 years down the line.
exactly.
But yeah, what works for other people is going to be different. So a lot of what we try to do is, if we push out these common themes, it doesn't mean that it's applicable to everybody. But they are, in fact, common themes. You can say, "Hey, this microcap thing is not for me. It's keeping me up at night. It's making me," But but other strategies to earn wealth. I mean, a dividend is as close to a guarantee in the stock market as you could possibly get. And there's probably a few other things that are even more of a guarantee.
Well, you
You know,
can't go wrong with these index funds either. Like that's,
no,
I've learned to appreciate them so much because in markets like this, what scares me the most, man, is just the like because like Algonquin Power, maybe a stock you don't know, Canadian Dividend Aristocrat, incredible company, utility.
yep,
I didn't like. How would I have known that company mismanaged their debt so bad that it took away like 30% of their earnings this quarter? The stock dropped 50%. They're likely going to cut their dividend. It's just like, I don't know, like you can't know everything about a company. So it's just like, even though you think it's safe, the
one stock.
best thing about the index, right, is it weights it by market cap, so you can hold them all. And if Facebook
Yeah.
falls off, then it just de-weights automatically, mathematically from its market cap. No emotion involved, and you always end up with the best stocks on top. So even in a recession, you end up building a more robust portfolio just holding a Vanguard index fund that does do market weight cap, adjustments. I'm not talking about mutual funds or managed funds, purely just the system of choosing stocks based off market cap performance. It's a brilliant system for passive investing that really saves you a lot of bullshit.
It's brilliant. It's brilliant. But when you talk index funds, right, it is significantly less, if at all, about the individual holdings
I
and
agree.
much more about the year over year performance. It's about that bottom line factor. It's about that factor. You can go back and you can track it. Okay.
Yeah.
Don't base your future blah 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 on historical returns. However, when you see an SPY, I just had a back and forth with Matt on Twitter today. It was kind of fun, but the root of that was really interesting in looking at the 1 year performance, the 3 year performance, the 5 year, the 10 year, and the year over year, with an average clip of 12.53 year over year. Yeah, you're going to have to incur some years. Maybe this year, the S&P, finishes down 12, 15, 18%, whatever it is. But that's what you're focused on, because yeah, the top end has rolled off. Microsoft, the Apples of the world have underperformed, but it's those companies on the other end that have actually carried that
Yeah.
average forward and helped solidify that one factor for you, and that's what matters.
Yeah, it's and again, I don't think we're not trying to push investing here on anyone because I don't think index funding. I was only an index funder investor literally since the beginning of this year, so I'm not talking like end all be all investment strategy here for sure. But like I said,
No.
it just became a place of resiliency when you can recognize the market is going through a moment where if you really don't know the companies you're holding, you're putting yourself into undue risk, because in markets like this, the bags are going to get shook. And if like Buffett says, the tide goes out, you're not wearing shorts. We're about to see who those people are. And it can be that person you thought was Facebook, Algonquin Power, like these huge list of incredible names, Amazon down 50%. Like, I mean, you just don't know, right? So sometimes in markets like this, it's better to just be cautious and kind of just wait it out and then start picking like you're doing. Like you look at these bottom markets and you're like, well, let's see who's surviving now. And this is the time,
Yep.
real estate, stocks, all this stuff. And, just to dig in and start doing the homework and find those opportunities of a lifetime. But on that note, I don't want to keep you all night because I've stayed way longer than I told my fiance I would. An hour deep now, baby. Let's go. But enjoy your night, man. And
Absolutely.
always a pleasure. Stay awesome, eh?
Same to you, brother. Take it easy, man. We'll be well. Keep in touch. Alice Passive Income Investor. Kick over there, help him subscribe to the channel. Appreciate his time as usual. Love to get his insights, man. Two different perspectives and the banter that goes on between us. There's probably a hell of a lot of value that can be picked up right smack in the middle of that banter. And the idea here is to share perspectives. Kyle mentioned not to, push investment thesis. I look to share what it is that I do. And I certainly would carry a lot less water, I think, if I came onto YouTube and I shared what it is that I do and was not successful in it. And what does success mean in the stock market? It doesn't mean that my portfolio is immune to downturn, which I have incurred some downturn. I've supplemented some of those with other aspects of my life, and some of the aspects of my life that have nothing to do with the stock market are actually doing incredible. 2022 is just a fantastic year for us. I mean, we relocated up here to New York, heard some fantastic professional news that I've been working toward for almost 2 decades. And I'm absolutely humbled at that. Is it fair to believe that the stock market is never going to be conducive again? Or is it more my onus as a bullish thesis and a bullish applicator in my program to understand that we will have better days? We will. And that is my sheer conviction. And that conviction I want to share with people when they feel like they've gotten down, or they've had too much of it, or they feel like they need to throw in the towel and subject themselves to short-term relief. I'm here to tell you that that short-term relief will be had at the expense of long-term gains and financial security in the long term. Guys, we have to be independent with our application. We have to build those programs that make sense to us. It is not difficult to do. What is more difficult to do is make people understand that what is right for me and is what is right for you is not going to be right for the masses out there. And you and only you are those ones that can determine the correct path toward financial security for you guys. We just look to empower one investor at a time, and highlight some of the tools that can get you there. Guys, I really appreciate you tuning into the message. We'll kick off now. I will be back next Friday on the Fastest 60 Minutes on YouTube. Guys, be well. We'll catch you next week.